Welcome back to the podcast, Good Deeds Real Estate with a Mission. I'm Diane Davidson. I'm here today with my partner and husband, Bill Weidecker of the Fine Homes Group team at Keller Williams. And our first foray into product placement.
So, once a month, we're going to give you a little bit of an update, and it's kind of like that old Led Zeppelin movie. The song remains the same because we are still in an inventory type market, and I believe, Diane, that this month for sure we are now starting to see that the severe lack of inventory is having an effect on closed sales. We know this. There's no doubt that if we had more listings, we would have more sales.
Mm-hmm.
That is just the case. And so year to date, we are just around 16, so some numbers to think about. Around 16,000 closed home sales, around 5,000 closed condominium sales. So 21,000 transactions, and each one of them has a listing side and a sales side, meaning there's usually a buyer and a seller for each one of them.
Mm-hmm.
And so that's a big number, and we're ahead on the condo sales and a little bit behind, about 5 percentage points behind on single-family homes.
Did you say behind year over year? Like this month we're about year to date?
Yeah, and we have just the November numbers, even
Okay.
though we're broadcasting in December. We only have the November numbers. So closed sales, we are just a little bit behind. It's 4.2% behind on the single-family homes, and we're 6% ahead on condominiums.
Year to date, right, Bill?
Year to date.
Okay, got it.
Year to date, same time, November, all of the year through November, I guess is the better way to put it.
Yep.
So, essentially, I feel like the numbers are so close, and yet for those that have sold homes this year, they've benefited in a big way. Last month, when we gave the reports, there were about $60,000 in equity gained. That's still the case. So we're about 60,000 on single-family homes ahead of where we were last year at this time.
On
17.5% ahead. So big number. Days on market, half. Standing inventory, about half from where we were last year, and from 2 years ago, there's about a third. So if you were to say how many houses are on the market, we are, stick with me, homes for sale, 1,380. Go ahead, question.
Just a question. When you say half, to explain to people who might be listening or watching, half of what? Sorry.
Well, so I say about half. That's on the condo side. Last year, right now, meaning the same time that this report was pulled, for the November numbers, there were 2,000 houses on the market.
Okay.
1,380 single-family homes now.
Okay.
So that's off by a third. 2 years ago, we were over 4,000 houses on the market. And 2 years ago, by the way, it was still an inventory-type market.
Right. Yep.
10 years ago, there was about 10,000 houses on the market. Plenty to choose from. Now, we're at 1,380. And condos, 336 condos for sale right now.
In the state.
In the entire state. It's really an unbelievable. And this time last year, this is the half number. There were 600.
That's what, okay, got it.
So we are definitely in an opportunistic market for those that are considering selling. The real wild card in all of this is as we speak, is day one of a 2-day meeting with the Federal Reserve this week, and they're going to need to make some kind of decision as to what to do about interest rates in 2022 and what to do about tapering back on the buying of bonds. My feeling is we're going to see interest rates increase in 2022. The question is when. I think the big bet is probably the end of Q2, the beginning of Q3, but there is pressure. There's definitely inflation pressure, and I think that is the wild card in this market in terms of what do we see if interest rates increase in terms of the buyers out there. Hard to know.
Because you talked about affordability before, so maybe recap or talk about that if you can today with regard to where that stands today.
So the Affordability Index is actually last year at this time, year to date, for single family homes, the Affordability Index was 130, Diane. Now it's 109. So it's gone down. Now, what that means is this. Last year, the median priced home in the state of New Hampshire, as financed by the median income earner, could buy 130% of the median priced home, meaning they were overqualified.
Mhm.
They're still overqualified, but the number is no longer 130, it's 109, so it is dropped. The affordability index is getting closer and closer.
Now, I'm not sure if I remember this correctly, but I think last month's numbers, it had gone down to 104.
Well,
And the reason I bring that up is I know the client of ours just got a jumbo loan for 2.75%, so I think there's been a little bit of a dip in interest rates, such that the index has actually blipped up a teeny bit. Am I right about that?
I don't know.
Okay.
I
So
don't
we'll
know
just say
I
yes.
can't remember last month's numbers.
Okay.
I can tell you that, if you take the affordability index for condos, it's gone from 174 last year.
Yeah.
Now, if you think about it, the reason that number's so high is because the average sale price, the median sale price rather, is much lower for condos. So the median income you're gonna be way overqualified. You can qualify at 174 percentage points. It is now 149, so it is also dropped.
Well, also the condominium fees, right? So
But that's including,
Okay.
that is included.
Okay.
So the point is that the median income earner can afford the median priced condo at
Mhm.
174 last year. It's now 149. Call it 150,
Very
right?
good. Yeah.
It's
One at times. Yeah.
yeah, but it's dropping.
Yeah.
And that's only because prices are increasing.
Yeah.
Prices on median priced homes have gone up 15.3% in condos, and I think I told you 17.5% for single family homes. So, it has been the best of times for property owners in the last couple of years.
Mhm.
Prices have gone up.
But it's still plenty affordable for buyers, right?
Yeah, it is one of those interesting times because interest rates have been so low. It is one of those interesting times where you say, is it a good time to buy? Yes. Is it a good time to sell? Yes. How can it be both? Because of those reasons.
Right. The rates. Yeah.
Yep. The biggest takeaway for me is that if you're thinking of selling in the spring, take advantage now. There's 1,380 single-family homes on the market right
Mhm.
now, and we're still seeing plenty of buying traffic. The foot traffic is a good indicator of what the future holds in store, and it's still up.
And the number of offers, right? We see properties with 13, 17, 20 offers, so there are many disappointed buyers and ready to buy something else.
We track the numbers every single day,
Mhm.
and so when we look at the overnights, we know that the activity is still there. What I mean by overnights is we look at the last week, but we update it every single day.
Yeah.
So we go back the last 7 days because a 7-day window takes out the blips of there's going to be a surge of listings on the weekend and a
Little
surge of
cycles,
under
yeah.
contracts
Yeah.
in the beginning of the week because there's usually a couple of day lag there.
Right. Okay, and on the anecdotal side of things, this seems to be a time when lots of new buyers are coming into the market. I don't know if people are using their vacation time, or they're doing that introspective thing they do during the holidays and kind of think about their living situation and, get a little bit curious and thinking about change. So we usually this time of year, see buyers coming into the market, just kind of toe in and exploring. And, the spring market that we talk about really starts in January. Buyers really start looking in earnest in January, and many sellers take their properties off the market for the holiday season, or don't want to go on until until April, they perceive as spring. So it's really it is a great time to be on the market, to be in front of all of those people. We're seeing lots and lots of new people in the market coming into open houses and calling on our listings. So that's been interesting. That hasn't changed.
No question.
Any other words of wisdom to close out the monthly numbers?
No, I mean, it is really a day-to-day, as I've said before, it is a day-to-day monitoring of the market. I see no reason to believe that we're not going to be here a month from now talking about the same thing. It's been a very repetitive market.
So maybe just rerun this?
No, we'll get better numbers.
Okay. Well, if that's it, thanks.
You're welcome.
So thanks for tuning in. Please be sure to subscribe to our YouTube channel or follow us on your favorite podcast platform.